The aim of this model is to explore costs, payables and payments, introduce the idea of debit and credit balances, and look at how the financial statements relate to the model that we see in front of us. The top half of this model is exactly the same as the previous one. The bottom half has introduced the new elements. So let's set costs initially to £30,000 per day and payables days, for example, to 14 days. We can set initial level of revenue to £50,000 per day. And to start with, let's assume the business is just receiving cash from customers. Clicking Start, we can see on the left-hand side the profit and loss, the right-hand side the cash flow. Clicking on items shows their position on the financial statements on the right-hand side. And the big thing to notice is that payables is a red balance. It drains downwards. As costs are incurred, they essentially drain the payables tank. So we've got blue balances that are debit balances and red balances that are credit balances. Again, we can pause and reset, and we can look at the effect, for example, of having receivables days much longer than payables days. We speed it up slightly. What we'll see is that the bank account is going to be overdrawn. And even though the business is profitable, its cash flow is negative.